All right, we are live. So welcome back to Dapp University. So today is a critical day for the entire crypto space. We're going to talk about that, why that's important, because crypto does not exist in isolation. It is an ecosystem that is connected to the rest of the world, and it is influenced by external factors. And there's some pretty big ones that we're going to talk about today and also tomorrow, and why this is such a big deal. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. We got David Stone, technically above realty, Ardal, Sunil, future crypto whale. I like that. Kodia, let's see, Daniel, welcome. All right, so let's see here. See my YouTube gonna publish the video and start sending it out there. Seems like it's a little bit slower to push it out these days. I'm not sure what's going on there. It's about the same number of total live stream attendance over the past 8 weeks, but for some reason the initial head count as it rolls in is a little bit slower. We kind of moved the time when they're on the live stream. That may have something to do with it. But anyways, all right, so let's just go ahead and jump into this. Let's talk about what's going on today in crypto that you need to watch out for. Well, it is the FOMC meeting that's going to happen at 2 p.m. today. So what is this and why is it important? Okay. So, we've been talking about this. We've been talking about what's been going on in the crypto space, on these live streams daily, Monday through Friday, I should say, since the beginning of the year, because everybody's been totally puzzled with what's going on with crypto. Like, we've been in this bear market. Prices have gone down like crazy. We saw another dip yesterday, despite our recent relief rally, okay? And the big question mark is what's going to happen next. Are we going to continue on to a downtrend, revisit the lows? We'll kind of talk about some of that maybe towards the end of the stream. But, crypto doesn't exist in isolation, man. The stock market's been having the same problem. We've seen a bear market in equities. We've seen the S&P 500 down, NASDAQ down, everything's down, all major indices. And crypto is no exception. Well, a lot of it's got to do with what's going on with the broader economy. Of course, I don't pretend to be a macroeconomics expert by any stretch of the imagination. It doesn't take a genius to see that inflation's a problem, okay? And that, we've seen the central bank pivot its policy towards the end of last year, and that's been a big headwind for everybody, okay? We've been raising interest rates, tightening monetary policy, reducing the balance sheet, all that type of stuff. And that's been going on really since the beginning of the year. And today we have a significant event that's going to determine how high interest rates go for the next leg. So I want to take a minute to explain this and try to educate everybody because, like I said, I don't pretend to be a macro expert. I like to talk about things that are important to the crypto space from a very holistic, standpoint. At the end of the day, my goal on this channel is to teach you all how to, get into the blockchain industry and actually, become blockchain professionals for sure. But that topic, it extends to so many different things. And what I want to really do is educate everybody on this channel. So first of all, let's start with what the Fed is even doing here, and how this is going to potentially impact the markets. So, you see that acronym floating around, FOMC. I think, sometimes people are saying, what does the FOMC even stand for? It's the Federal Open Market Committee, okay? And so basically it consists of 12 members, 7 members of the Board of Governors of the Federal Reserve System, the President of the Federal Reserve of the Bank of New York, and 4 of the 5 remaining 11 Reserve Bank presidents who serve 1-year terms on a rotating basis, okay? So, the FOMC meets, I believe it's 8 times a year. Okay, they take a few periods off, but they basically one of the outcomes of this meeting is they determine what's going to be the federal funds rate or the overnight rate that banks can basically lend out money. All right, and so this has a high influence on other interest rates, other types of lending, and lots of other things. There's a misconception that the Fed's getting in here to set mortgage rates and stuff like that. That's not exactly how it works, but this does influence lots of other things, particularly in the economy, and it also heavily impacts because it impacts other interest rates. It impacts people's appetite to take on debt, and that applies to everybody, okay? And particularly with businesses, and particularly with technology businesses, high-growth businesses that are not making a ton of profit relative to, or not earning relative to what their valuations are. Hence, we've seen a lot of, tech stocks, things like that get hit quite a bit since the beginning of the year. And then also, crypto is highly correlated to that, and even, more risky. And crypto has been hit quite a bit relative compared to that. So, how does this also, affect, how does it also affect crypto? Well, it's not just about the interest rates. Of course, whenever you have low rate environment, people are more risk on. They're willing to take more risks with things like crypto that have, more growth potential. So it's, total risk reward scenario. If the higher returns, the higher the risk type situation. But it's also got to do with the money supply. There's a high correlation of money supply growth and crypto gains. Okay, and we're talking about quantitative tightening. We're actually reducing, the money supply. That has an inverse effect, in many people's view, on the crypto markets themselves. So let's talk about what's going to happen with the meeting today. What are some possible outcomes of this, and what could it do to the crypto space? So, like I said, the FOMC has these regular meetings per year. We have one today, is scheduled for 2 p.m. Eastern Standard Time. So that's going to be 1 p.m. Central in my time zone. Basically what happens, they meet, and then they release the results of the meeting. So the press conference, I believe, will actually be, they'll release the results, they'll publish them, and then they'll have a press conference where they'll follow up and clarify any any questions. They'll have some dialogue and Q&A there. But I believe that the actual the minutes are going to be released at 2 p.m. and that's when, we'll find out. And if that ends up being market moving information, that's exactly what it'll hit the web. I'm sure somebody will have it, 5 minutes before. But that's what we'll hear. So, what are the expectations for the meeting today, and how could this potentially impact the crypto space? So, we've seen rate hikes happen since the beginning of the year, starting off with 25 basis point hikes. So what is a basis point, in case y'all are not familiar? So basically, you're talking about a fraction of a percentage point. Okay, so a 25 basis point hike is 0.25%. Okay, so the reason you use basis points is because you're talking about you want to be very clear on what you're saying, because if interest rates are 1% and they go up 25 basis points, that's a 25% increase, but you're not raising interest rates 25%. So it's a way to clearly communicate exactly what you mean, right? So that there's no ambiguity. So anyways, we started off going up 25 basis points beginning of the year, quickly moved to 50 basis points, quickly moved to 75 basis points, and it seems like the market is pricing in a 75 basis point rate hike for today. At least that's what the broad expectation is among most of the sources that I'm presently looking at. Now, we're going to find out whether that's the case, because there is probability that we get higher than a 75 basis point hike. Okay, we could see 100 basis point hike, and that's the odds on the table that we're trying to figure out. Is like, I mean, what's to stop him from doing it? Like, nothing's stopping him from doing it. We've seen to go from 25 to 50, 55 to 75. What's an extra 25 basis points to them? And I'm not ruling it out. I'm gonna wait around. Only have a few short hours before we find out this information, so I'm not making any big bets because anything goes, in my opinion, at this point. So, if we see something like 100 basis points, or increasing by a total percentage point, that could be the type of situation where we get more volatility in the marketplace than is expected. I don't try to call too many short-term moves on this channel, but it seems like pretty much every time we get some new information about what's going to happen with the economy, whether it's within people's expectations or not, we're starting to see some sort of volatility. So I'm banking on some type of volatility in the next couple of days, because even after today, we don't have, even after today, like let's say we get the basis point hike that everybody's expecting. We have the GDP numbers coming out, I believe it's tomorrow as well. And so that's going to be another event that could potentially have volatility for crypto. So we're kind of going through this week of, kind of scary territory of uncharted waters, okay, where there's lots of dragons, so to speak. So we got to get through the basis point hike. We've got to get through the GDP numbers. We've been through the big tech earnings this week that have also, corresponded to some volatility in crypto prices. So, it's hard to be hard to treat this event completely in isolation. To see what impact it actually had, because there's so many other factors on the table. Now, of course, if we get a 100 basis point rate hike or something higher than that, which I really don't expect, and then we see some, quick, sharp volatility, well, duh, it's going to be obvious exactly what the factor there was. But, if it gets, sometimes we see the event happen and we see sort of a delayed response. We saw that earlier this year with some of the rate hikes where things were like kind of short-term fine. And then, within a week, we saw some pretty sharp downward price action across broader markets and, of course, crypto. Now, of course, crypto's had its own specific set of problems that have hurt it more than other markets since the beginning of the year. We've seen major funds blow up. We've seen you've seen the Terra Luna stablecoin disaster, algorithm stablecoins going haywire, completely out of control, and completely annihilating so many people in the crypto space, and who are never coming back, and for good reason. Lost all their money. It's absolutely insane. And so, we've seen some recovery, I think, from some of those things, but we still cannot escape the broader economic forces that are having a big impact on crypto. Because again, this space does not exist in isolation. It doesn't exist in a vacuum. It has external factors. Okay. So, ETH, I've been, keeping an eye on this because I put on my Twitter today that ETH is, it's roughly 7 weeks from the merge. Okay. Roughly 7 weeks. Let me just pull up my screen here. And that's an event that I am, keeping a huge eye on, because I've been talking about this, for years, literally years, on this channel now. And this is Ethereum moving from proof of work to proof of stake. Going to have negative annual issuance or deflationary, assuming the network activity sustains over time, which I don't see any reason for it to significantly drop from where it is now. And that's going to be a huge catalyst for ETH over the long term, in my opinion. Okay, we don't exactly know what the short-term price action is going to be for ETH. There's a lot of people betting on the merge and having a merge trade. It's one of the reasons we've seen the ETH price, in my opinion, go up faster than something like Bitcoin. We've seen the ETH to BTC ratio change quite a bit, and that is only 7 weeks away. So let's just look at that is definitely an event. It's really interesting timing too, because, there's a lot of people that are betting on crypto forming a bottom. I'll pull this up right now. So we can see, my camera keeps doing this. There we go. We can see the ETH to BTC ratio right here. Basically, this is the Ethereum price to Bitcoin price. It expresses a ratio. So whenever this goes up, it basically means that Ethereum is holding value or appreciating better than Bitcoin, right? So if it's going down, it basically means Bitcoin's doing better. And we've seen this ratio go up. And again, I'm not a big technical analyst, but I've looked at some other technical analysts' perspective on this channel, who have kind of been like, hey, whenever you see these big changes in trend here, that looks like it could, push off to a new all-time high. If we add a new all-time high on the ETH to BTC ratio. I don't mean a new all-time high in Ethereum price. I want to be clear on that. But a new all-time high in the ETH to BTC ratio, that could put ETH in a pretty good territory. Because if ETH was at if we broke 0.08, got to 0.09, I'm trying to think about what price that would put ETH at right now. Let's just actually take a look. Not sure why my camera does this. There we go. It just started doing it like a few months ago. So thanks for being Patient with the technical difficulties here, everybody. So you can look at this website, ratiogang.com. It shows you what the ETH to BTC ratio is and how it would change. So, 0.15 ETH would be at $3,400. So, at 0.09, that would put ETH, if it could be the Bitcoin price didn't change, it put it north of $2,000. Which honestly is not that crazy. like ETH is $1,400 right now. We saw ETH double in price off the lows basically in a couple weeks. Like there's no reason to think that ETH couldn't double again in price from here pre-merge, especially when you're talking about a massive catalyst while Bitcoin's still kind of like playing in the sandbox. I'm not forecasting that's going to happen. I always like to talk about possibilities on this channel because nobody really knows what's going to happen next. If you've been following crypto at all over the past 18 months and have have blindly followed anybody who's said with absolute confidence that something's going to happen by a certain date, then you've probably been sorely disappointed. So I never try to do that on this channel, but I do like to think about things in terms of possibilities. So for example, is Bitcoin going to go to zero? Probably not. Like, could it go to zero? It theoretically could. Is Bitcoin going to go to 100K like next week? Probably not. Is it possible? It is possible, right? So that's the type of thing I mean. So like if you think about things like, backing off the extremes, like what is possible? Like is it even possible that ETH could essentially double in price from here pre-merge and outperform Bitcoin and basically print a new all-time high? And this is not even the all-time high. Hold on, everybody. Sorry. And I did this before, like had the resolution. But let's just say it's a local all-time high, okay? Then that's very possible. So let's entertain the possibility of a true all-time high, okay? So I'm correcting myself here. 0.11. So where would that put us? So that would still put us flipping of 0.15. We've never hit that point, but still, like that would put us probably close to $3,000, which is about what I was getting at just a second ago. So like ETH would just have to do a little bit more than double at this point to print a new all-time high on the ETH to BTC ratio. Okay. So like, is that in the realm of possibility? It is in the realm of possibility. Considering the fact that we have a significant amount of price history above $2,000 on the ETH chart. Let's just take a look here. If anybody knows a good tool, this is something I'd love to find out. A tool where you can basically like examine, let me know in the comment section below. I'm looking for a tool where you can easily look at the number of days that a crypto asset has traded at least a certain price level. I know you can sit down and like write some tool to like do it. I'm trying to find something that's easily plug and play. I'm sure you could probably like scrape the daily price data and put it into a SQL database and write a query in like 2 seconds. I get that part, but I don't want to do that. I want to just like quickly, have a done for you tool where you can basically like do fast analysis on crypto price data. Because what I would like to see from risk reward scenario is like, say, how many days has ETH traded above, $3,000? I mean, you could quickly kind of zoom out on a chart like this and start to just like kind of, look at this and then kind of, put a guesstimate together based on this. You can still say that's kind of firmly in maybe bubble territory. But the whole point is trying to have an analysis like, hey, this is how many days ETH has traded above this price level. And then you can sort of use that to see what the likelihood is that ETH could actually hit another $3,000 plus point on the short to midterm. So I'm a believer that is possible, right? It is possible. I'm not, like I said, I'm not saying that's going to happen. I'm not saying with any amount of confidence that I'm not trying to say it's a 50% chance or a 80% chance, 99% chance, but it's not a 0% chance. I'll put it that way. So let me know what y'all think. Can we get ETH? Can ETH make a new all-time high on the ETH to Bitcoin ratio? I'm not saying the Ethereum price, the Ether price. I'm not saying ETH has to break above $4,800. What I'm saying is, can we see a new high on the ETH to BTC ratio, around the ETH merge event? Invest in new equipment. It's a pretty nice camera. I don't think I want to buy a new one. So it's a light sensitivity thing. It might be. Yeah, it's a good point. But it only started happening like maybe, I don't know, maybe like 2 months ago. Look up price weighted by reserve risk. I wonder why I would be struggling based on lighting. I mean, I'm pretty lit up in here. And it's a super low light performance camera. It's a Sony A7 Alpha S3. Okay, so anyways, we've got the Fed meeting today. Eyeing whether this is going to be a 75 basis point hike or a 100 basis point hike. Also tomorrow, we'll be talking about this. Go give me a follow on Twitter. We'll be watching the interest rate announcements around the time they come out. Okay. So you can follow me over here. We'll probably do like a live tweet update or something like that. We'll, of course, cover it again on our live stream tomorrow, so make sure you subscribe, turn on notifications. We'll also be covering the GDP numbers, which are going to come out tomorrow as well. So that's the other big volatility event potentially in crypto this week, is that we're going to find out what's going to happen with the actual gross domestic product in the United States. I'm not sure why this keeps doing this. See if the lighting theory makes sense. Yeah, I'll move the light and it kind of matters. I'm not sure what's going on. I've got pretty controlled light in here. Like I don't even have a window inside this booth. So I'm not sure why it does that. Anyways, we've got GDP numbers coming out tomorrow. Basically, that's going to tell us whether or not the U.S. is going to be in a recession. Although we could see some, hand waving around that type of thing, because many people play by the GDP rule for recessions, basically saying that if the GDP contracts by 2 consecutive quarters, then you're in recession. Now, there's many people who fight that definition. Okay, we've seen lots of pushback on that, saying like, oh, it's more complicated than that. Like we have to use these other factors in play. Okay, but classically, many people have used that rule of thumb. It's a rule of thumb over time. And if we see another consecutive quarter GDP print, or have lots and lots of people scream the R word, scream recession, even if there's pushback and saying, no, that's not how you define recession, they're going to run with it, okay? And if enough people run with it, that's the type of thing that makes markets potentially panic, even if a recession's priced in, right? Like, there's a lot of people that say, hey, how much more bearish can you get, this year? It can always get worse, of course, but, we've already been down significantly in the equities markets, and many hold the view that recession is priced in. So even if we get it, the long-term pain may not be as bad, because, of course, markets lead markets lead the economy in recessions, not the other way around. And so, could R word essentially just be a short-term, pain for markets in general. So we'll have to wait and see, but we will be covering that tomorrow for sure. Just buy the dip, bro. That's a comment in the chat. I'm not giving financial advice on camera. So Andrew says, Rinkeby test network is deprecating soon. As a noob, I've never dealt with a project on a test network that's deprecating. Why do test networks deprecate? It's a good question. So, test networks are literally just community projects. So, a blockchain really is just a community project in itself, but there's a huge financial incentive to maintain them. On test networks, it's like there's no Like there's no financial incentive really to run the test network. Okay. So that's why you see them sort of sunset over time, because there'll be technical changes, like different different communities kind of converge on different missions, new test networks pop up. It's a pain. I'll guarantee that, right? As a blockchain developer, I get this, like test networks, moving around, and then basically like, faucets stopping working. Trust me, I support educational, materials, and it's a real pain in the butt whenever a faucet stops working and you spend all this time building something, and then especially like recording instructions on how to use it, and then you gotta revise that stuff. So yeah, it's painful. It's just part of unfortunately, it's part of the experience. Basically, so what's the solution? I mean, if you have an app on a test network, you have to migrate test networks. Just what it is. Someone says merge, surge, verge, purge, splurge. What's your timeline on all this? So I mean, we're definitely on a multi-year timeline for everything, for sure. It's not going to happen overnight. Merge, I mean, I still think, could the merge get pushed back beyond the September 19th advertised date? It could, but if the test network actually goes successfully, or completes successfully, then I don't see a big reason for it to be too skeptical of the actual date. Now, what I will say is this. There's a large number of people online who are like, oh yeah, I've been hearing about this Ethereum 2.0 thing for years and years and years, and they just keep pushing that thing back, and there's no way the merge is actually going to happen later this year, because they always just push the stuff back. So this is not the same situation where there's this there's this big expectation that comes out from the community that something's going to happen, and then it doesn't happen. Like this is the core team saying, okay, we have a target date set for this. And when the core team does that, like they're starting to be pretty confident of their time window. Okay. Now it doesn't mean we couldn't see a small delay from there, but like whenever we had the initial beacon chain announcement, like we were like, it wasn't just like we just threw out a date and that date kept getting pushed back. Like we saw some delays from people's expectations, but when the actual advertised timelines came out, it's not the type of situation where they just endlessly procrastinate or push things back once expectations have actually been set. So that is not something that I would anticipate for this next upcoming merge. Man, this is really annoying. I have to change some settings on my camera or something. Optimism has been on fire. What's my take on OP after the merge? Basically, I think that layer 2s are going to continue to thrive after the merge. Because that's the thing is, I mean, merge is not going to fix the gas fee problem. It's not going to fix scalability. And there's a lot of people who still think that, despite me saying that every single week on this channel, on these live streams, but it's not going to. That's what layer 2 scaling solutions are for. And I believe we'll continue to see those grow over time. So overall adoption this bear market has been better than previous bears. We're not seeing people leave like before. I mean, we are seeing some people leave. It's not the same, right? Like, yeah, you're right. That a lot of people are not tuned into this space like they were, 6 months ago, a year ago. A lot of people have checked out, but the builders have definitely not checked out. It's really important. Which is also good if you're watching this channel, because that means there's still a ton of opportunity. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people learn about blockchain. And if you're as fast at this technology as I am, you want to get your hands dirty, how can you get started today? Get to my YouTube homepage. You find those free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you'll take a master's shortcut entirely, actually become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You get to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks.